Hey everyone, welcome back to Corporate Decoder, where we decode the hidden meanings behind corporate filings. And today we've got a very special report with a twist that might make you think twice about what is really going on behind those shiny IPOs. Before we dive in, if you are here for no nonsense, easy to understand corporate insights, make sure you hit that subscribe button. And hey, we've got a fantastic community brewing on Discord, linked down below, where we dissect these filings together. You won't want to miss out. Alright, so what we have here is a Form 8K filing. Think of this as a company's way of quickly telling everyone about a really important event that has just happened. It is not a regular report like a quarterly or annual one, but more like an urgent announcement. The big date for this event is the 16th of January 2026. This is when the company decided to make this announcement public. The company making this announcement is called ITHAX Acquisition Corp. III. If that name sounds a bit generic, you are not alone. Companies like this, often called SPACs or Special Purpose Acquisition Companies, are essentially blank checks. They go public first, raise money, and then look for another company to buy or merge with. So this filing is likely related to that search or a step in that process. Interestingly, this company is incorporated in the Cayman Islands. This is a common practice for many financial firms, often for tax or regulatory reasons. Here is its commission file number, the 001-43006. This is like its official ID with the Securities and Exchange Commission, or SEC. Now, let's look at where their principal executive offices are located. They are at 826 Collins Avenue, NU, Suite 201, in Miami, Florida, with the zip code 33,139. Their phone number is 305-469-0917. Keep that in mind if you are curious about reaching them directly. This box being checked tells us that ITHAX Acquisition Corp. III is considered an emerging growth company. This designation comes with some benefits, like being able to delay adopting new accounting standards. It essentially means they are newer, smaller companies, and the CC gives them a bit of leeway. Now we get to the core of the announcement under other events. This is where the real news is. So on that, the 16th of January date, the company put out a press release. The main point is about their units. When companies like this go public, they often sell units, which are like a package deal. In this case, each unit contains one Class A ordinary share and half of a redeemable warrant. What is happening now is that starting around the 20th of January, 2026, people who hold these units will have the option to split them up. They can separate the class of shares and the warrants and trade them as individual pieces in the stock market. If people don't separate their units, they'll keep trading on the NASDAQ under the symbol ITHO. But once they do separate them, the class of shares will have their own ticker symbol, ITHR, and the warrants will trade under ITHOR. This often happens after a SPAC has been around for a while, allowing investors to tailor their holdings more precisely. A key detail here is about the warrants. Since each unit has half a warrant, when you separate them, you'll only get whole warrants. This means you would need 2 half warrants to make up one whole warrant that can be traded. They're not going to issue tiny fractions of warrants. And if you are a unit holder and want to do this separation, you can't just do it yourself. You'll need to go through your broker, and your broker will then contact the company's transfer agent, Continental Stock Transfer and Trust Company, to make it happen. It is a formal process. Then we have item 9.01, which deals with financial statements and exhibits. This section basically lists all the supporting documents that are attached to this filing. The most important exhibit here is exhibit 99.1, which is the actual press release they issued on the 16th of January 2026, detailing this whole unit separation. And exhibit 104 is the interactive data file, which makes the information in the filing more machine readable. This is important for financial data users and regulators. Finally, we have the signature section. This is where the company's authorized personnel sign off, confirming that everything in the report is true and accurate to the best of their knowledge. Here we see the signature of Orestes Fintiklis, who holds the dual roles of Chief Executive Officer and Chief Financial Officer. And the date of this signature is also the 16th of January 2026, matching the report date. So what is the main story here? ITHAX Acquisition Corp. III, a SPAC, is letting its investors separate the company's shares and warrants from the units they bought. This usually signals a company that is either getting ready to announce a merger or is providing more flexibility to its early investors. For a SPAC, this is a step towards either finding a target company or potentially returning money to investors. If they can't find a deal, the real action for this stock will be in what they plan to do next, which isn't detailed in this specific filing. This 8K is more procedural, enabling investors to trade the pieces of their investment separately on the NASDAQ. It is not about the company's current financial performance because, as a SPAC, it doesn't have substantial operations yet. It is all about the future deal, From a Warren Buffett perspective, you'd be looking at this and asking, what is the underlying business they intend to acquire? What is the management team's track record in identifying and integrating such businesses? The fact that they are incorporated in the Cayman Islands and are considered an emerging growth company tells us this is likely an early stage play. The separation of units into shares and warrants is standard practice and aims to provide liquidity to early investors. However, it doesn't tell us much about the intrinsic value of the potential future acquisition. The risks here are significant. The SPAC might not find a suitable target, the market conditions might change, or the acquisition, once announced, might not perform as expected. The opportunity lies in the management team's ability to find and execute a compelling acquisition. Without knowing the target, it is very hard to assess the financial health or future prospects of ITHAX Acquisition Corp. III. This filing is more of a logistical update for traders than a deep dive into business financials. It boils down to trust in the SPAC sponsors and their ability to spot a diamond in the rough. Alright, that is our quick decode of this ITHAX Acquisition Corp. III filing. What do you think about this SPAC maneuver, and what does it tell you about the company's next steps? Let us know in the comments below if you found this breakdown helpful. Give us a thumbs up and remember to subscribe for more. Also, our Discord community is growing fast, so come join the conversation about these and other financial documents. See you in the next video.